I'm Jerry Howell from Assured Concepts with a March 2015 Educational Economic Update. In this month's video, we will talk about some of the major economic events that occurred last month and give you some insight into what they might mean for you as an investor. Please stay tuned at the end for a required disclosure statement. The Federal Reserve and interest rates dominated economic headlines last month. To support the economy, the Fed has kept interest rates at historically low levels since 2008. Since bond buying operations ended last October, the next step will be to start slowly raising interest rates to quote-unquote normal levels to prevent inflation from getting out of hand. After the March Open Market Committee, Fed Chair Janet Yellen announced that the Fed is moving away from the patient interest rate policy and will start thinking about raising rates this year. Though we don't have a date yet, many analysts think that rate hikes could come as early as mid-June. Though investors are getting nervous about higher interest rates, we know that the Fed will move carefully to avoid damaging the economy. Speaking of the economy, we also got a look at the final fourth quarter gross domestic product reading, which showed that the economy cooled in the last 3 months of 2014, growing just 2.2%. This brings overall 2014 economic growth to 2.4%, up from 2.2% in 2013. Investors care about GDP because it's our most comprehensive economic scorecard and shows us at a glance how the economy is doing. Though the relationship is not simple, healthy economic growth generally translates into strong corporate profits. All else being equal, strong profits usually boost markets. Digging deeper into the data, we see that strong consumer spending, exports, and business investments supported the economy. The growth rate decreased because of our higher imports and lower federal government spending. To translate all of that into plain English for you, the economy was fundamentally on a very stable footing at the end of the year. Though we do not have first quarter GDP numbers yet, clearly the Fed feels comfortable enough about the economy to think about taking away the training wheels. Looking ahead, as the first quarter ends, investors will turn their attention to corporate earnings reports to find out how U.S. companies performed. Right now, overall expectations are lower because of weak overseas demand, low oil prices, and the cold winter. Since leadership teams like to under-promise and over-deliver, we can hope for some positive earnings surprises. We will know more in the upcoming weeks. That is it for the March Educational Economic Update. As always, if you have any questions or concerns about what we have discussed, please call our office at the number below. Once again, this is Jerry Howell with Assured Concepts signing off for the month of March. Please remember that nothing we talk about here is recommendations. If you would like to discuss your personal financial situation, please give us a call at 847-426-1077. We'd be happy to talk to you.